Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come something from the economic calendar or a combination of that with headline news or geopolitical news. Sometimes even the market sentiment changes, and it may be a little confusing if you're not aware of what's going on. And where good news is now bad news, and vice versa. We're here to try to give those explanations for you. So if you're in the market looking to refinance or purchase, you might be trying to watch rates. Hopefully, this will give the information you're looking for to make an informed decision for yourself. Or sometimes you might be in the industry, you might be just wanting to know what's going on with the markets. We're hopefully giving you the information you're looking for. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. So if we'd love to be able to earn your business, so please reach out to us if you're looking to buy and get pre-approved and purchase, or if you're looking to refinance. But more than that, would like to be a resource for you folks. So if you guys got questions about anything, we are here to answer anything we can to the best of our abilities and get the information to you, so that way hopefully you get what you're looking for. Um, Without further ado, we'll just jump right into it. We'll start off with the economic calendar today, and today is kind of the big one this week, which is inflation data for the consumers, and that is Consumer Price Index, or CPI. So we'll start off the main index here, month over month CPI, and last month for the month of February it rose 0.8%. However, it increased in the month of March, came in expectation at 1.2%. So its annual went from 7.9% with a forecast of 8.4%, exceeding that to 8.5%. So the headline numbers is at 8.5% year over year. Now, when you strip out variables like food and energy, which we don't have any control over, that creates what they call the core CPI. This is kind of the base of what they really look at and give more weight to. So it's month over month on the core CPI. In February, it rose from 0.5%, and the forecast was calling for maintaining that, and it went up only 0.3%. Now its annual went from 6.4% with an estimate of about 6.6%, and it came in a little shy at 6.5%. Now the core came in a little bit shy. Came in a little shy of the expectations. So investors are getting a little bit happy with it, as you see here with mortgage-backed securities. They're up. We'll touch on that in a second. Stocks are up, primarily due to with lower than expectations in terms of the core meeting it. So they're hoping that maybe this might show some type of cap or some type of slowing down, and hopefully that maybe we could see inflation cooling off a little bit. So again, this is something we'll keep our eyes on, but this is what's driving the markets today, as a matter of fact. Now, there's also another report for some reason, unfortunately, it doesn't show up on my economic calendar, but small business is today. It's a survey sent out to small businesses called NFIB Small Business Index, and they reported a 2-year low today. And the biggest thing is inflation, of course. And second behind that is labor behind that. So its biggest reason is inflation. Now, they are important primarily because they do make small business do make up the large majority of jobs out there. And if they're not happy or if they're not feeling as well about the economy, they're going to pull back and probably not hire. So jobs could be declining as a result of that. So that's why we do like to try to keep an eye on NFIB Small Business Index here. Later today, we do have a 10-year note auction, so this could have some impact with the bond market here as well, depending on the appetite for it. Now, um, so let's go ahead and take a closer look here. As you see here, right now we're up 61 basis points. We did start the morning off much lower. As soon as that came in, as you see here, as it came in, the news on the the inflation data came in, it shot right up, and it's been kind of in this range here for a while. It's like right around 53 or so. It just recently kind of got up to 63, but for the most part, it was like right around the 53% basis point range this morning, right around this range here for the most part. And then just recently kind of went upwards a little bit to 63 basis points here. Uh, let's go ahead and take a look at treasuries, see what's going on with treasuries here. Just that. Right now we are down to about 2.7 right now. So right now we dropped a little bit down to 2.7 after being yesterday, closing at 2.78. So we're down about 8 basis points right now. So lastly, we will look at is the average, national average for conforming loan limits for a 30-year fixed, and then we'll look at the 15-year fixed. And the 30-year fix, if you want to look at, is right now at 5.25%. And then we'll look at the 15 years at 4.42% now. So yes, rates have been climbing for quite some time, and they just haven't seemed to find that ceiling yet as to when they might hold or not. So stay tuned. But if you guys are out there floating any rates, it's better just to kind of lock in because yeah, we might have a good day here and there, but it's like a head fake. Next day could come in worse. So. Like here, we've had a few days where it looked like maybe we saw the bottom. Next day, we end up getting a much worse pricing. So better just to lock in and play it safe with these days. All right, folks. Well, if you like these videos, please help us out. Smash that like button and share us. We greatly appreciate it. Subscribe. We do appreciate you folks. If you guys got questions, again, we're here to help answer anything you guys got. So you guys have a great rest of your day. Thanks so much for watching. Look forward to see you guys in tomorrow's video. Bye-bye.